I see quite a few familiar names here and quite a few new names. So I'm just going to share with you a brief overview of the company, our approach, and then we can talk a little bit more about the recent news and some of the things we're looking forward to in the fall. We've released a technical update and a roadmap. So this is all things we've shared publicly already, but always good to be able to ask a few questions around that too. So this is a deck. Version of this deck is available on our website if you want more details. The standard disclaimers here that we need to share, and you should certainly read. I encourage you to read so you're aware of the approach here, and how we, particularly as we go into some of the more details around revenue scenarios, what kind of assumptions are behind those revenue scenarios, because we're in a fast-moving sector here. We generally take a very conservative approach to our revenues and to our volumes, but within the deck, we've got very detailed clarifications of what our assumptions are behind those scenarios. So executive summary, this is a team that's already developed over 50 million tons of carbon credits, over 6.5 million hectares of conservation, and over 10,000 hectares of land restored to date. Our core focus is on meeting growing demand from global companies that are trying to reach net zero, and fundamentally the demand for that is coming from over 4,000 net zero companies that represent 33% of global market capitalization, and they can make their own internal reductions. They can reduce costs where they can, and emissions where they can, and then the balance of the reductions have to come from carbon credits. I say this over and over again, despite everything going on in the world, the demand for those credits from the large final emitters and the buyers that we speak to hasn't reduced at all. And if anything, the oil and gas companies are feeling, and resource sector companies are feeling even more pressure now to take action to meet those goals. Our business model is we're an owner-operator of these projects. We feel that to get to the kind of quality control that buyers are looking for in terms of the design of these projects, we have to have direct operational control over the development of the projects. And what we found in the last 6 months is, in some cases, the buyers even want some customization beyond what we put into the initial outline and proposals, with selection of particular species and species mix, selection and input into the design of some of the benefit sharing agreements. So we're in a market where it's almost like custom and bespoke development of very large scale projects. And in that first project, we're looking at up to 25,000 hectares under option to develop in Sierra Leone, and a further 32,000 hectares that we can also develop in that country. We see already potential for restoration of 70 to 150,000 hectares from the work we've done so far. And the beauty of this model, ultimately, from a revenue perspective, is upfront costs associated with that land restoration or securing the conservation easements generates a 30-year annuity from those projects, and all of the forward-looking projections around carbon pricing anticipate pricing growing up to $75 a ton from where we're seeing right now, which is closer to $15 per ton. We also work with some of the world's best technical project developers, Silvestrum, Ostrom, Ecosecurities, and a leadership team in Mexico at the university in Merida. Our first major milestone, which many of you will have heard about already, was through a competitive tendering process which was won by a Fortune 100 company out of Europe. We've spent about $2 million on the initial development of the project. The company pays the remaining $2.5 million US for the capital costs of the 5,000 hectare site, and we repay them with tons. So there's an effective price on those tons, which is well above market pricing, and they have a right of first offer on the remaining 20,000 hectares. We'll be talking about the results and feedback from a site visit over the next couple of weeks that was scheduled for October and announced for October. But everything we've heard from the buyer is very positive. So from an equity perspective and an investment perspective, we get to be very efficient with our own capital. And we use the purchaser's capital to fund the CapEx and the development of the project. And that's a pretty unusual model in the space, and it reflects how short the market is of carbon credits. This is our executive team, many names you'll have seen before. Kev Godlington in particular on our West African projects is key on operations on the ground, managing relationships with government, regional chiefs, and then also prospecting in West Africa and in other countries for us to allow us to potentially scale the business. These are some of the, on the right-hand side, you'll see some of the brands that are committed to net zero. We're in discussions with a number of technology companies now who've established funds, not just to purchase credits, but actually to support some project finance in this area. So early partnerships into this space. But again, to put it into context, 4,000 companies representing 33% of global market capitalization of all companies have made net zero commitments. So the demand relative to the scale of these businesses now is unprecedented. Again, you'll only really hear about nature-based solutions from us, and the punchline here is really that they're the largest and most scalable projects, and they're the lowest cost of carbon. So when you look at the promise of things like carbon capture and storage, big engineering solutions, the cost per ton of carbon of those is north of $100 a ton. And that's even from an optimistic analysis. Our projects, we're looking at a cost of between $5 and $15 per ton. And this represents 65 to 85% of the supply. So we focus on these because they're the most scalable and the lowest cost credits in the ecosystem. The problem with the market has been that it's unstructured, that it's small scale, that it's almost in mining terms, it's like a series of artisanal businesses. It's supply constrained. We focus on large scale jurisdictional agreements that give us rights within certain jurisdictions to develop these projects. We see think about developing projects on a concession and industrial scale using some of the financing mechanisms that we see the oil and gas and resource sector use. So that's our problem solution framework, target nature-based solutions. We target highly productive, low-cost tropical jurisdictions where the trees grow 3 times faster than they do in Canada. And we look at jurisdictions where we believe we can add a lot more value. So in places like Brazil, you have very sophisticated forest monitoring. They have their own satellites. They have their own legal framework for managing forest avoided deforestation. We don't add an awful lot of value there. In places like Suriname, Guyana, Sierra Leone, Liberia, Ghana, and Guinea, and even in our work in Mexico, we bring a huge amount of value to these commercial deals and help address issues like legal title and carbon title, as well as the underlying science here. A lot of the transactions in the market are private transactions, so visibility into carbon pricing is difficult to get. What you tend to see on the carbon trading platforms is small volumes of, and not necessarily leftover, but of a subset of the total projects. We think 70 to 80% of the transactions are private, so price discovery is challenging. With Delta Blue Carbon, which is a blue carbon project in Pakistan, over 60 years, 142 million credits, has been trading at above $29 a ton, and in the most recent buying for 2026 vintages is seeing pricing towards $50 a ton. So we have to do a fair amount of homework to dig in and find out what the real pricing is, and there are also some groups like Platts Carbon that are tracking and monitoring a lot of these transactions. But we're starting to see very large scale purchasing and very promising signs on the pricing side. We shared this before as well. This is where our projects are under development, very well advanced in Yucatan. We've been working for 2.5 years on mangrove restoration and conservation. We have a full operating company in Guyana that looks at carbon and also coconut water production and land restoration. We've just completed the first 1,400 of hectares of land restoration in Sierra Leone, and we're looking at neighboring countries there as well. And we announced a few weeks ago an agreement in Suriname signed by the President's Office of Suriname to develop mangrove projects there. Tend to look at sort of 500,000 tons per year and upwards, just to address some of the costs. We tend to focus on restoration and afforestation, reforestation projects, because that's what the market wants to see at the moment. We still use Vera. We think Vera is the strongest and largest global regime and registry for carbon measurement. And we have a strong focus as well on equitable and fair benefit sharing. That's partly because we're an ESG and impact company, but I would say even more importantly, that these kinds of strong economics for local communities and governments are the best insurance that nobody ever revisits your deals, and that you can have some assurance that they have enough commercial interest in them. Earlier companies have made mistakes by providing fixed prices or underpaying local communities, and that puts those projects at risk as things progress. In terms of development process, we take on the kind of at-risk early exploration work, the site development and reserve quantification. Then we present those to potential buyers. Ideally, we secure term sheets and pre-purchase agreements that help us fund the costs. But to put it into the context of a mangrove project where we would spend under $1 million developing the project to completion, we might see an initial harvest of tons of 400 to 500 tons in the first per hectare for the first 2 to 3 years, and then 5 to 7 tons a year on an ongoing basis for the 30-year lifespan of that project. So our return on that initial risk capital, the multiples are pretty incredible as a resource company. It isn't like mining and oil and gas where you have to spend tens to hundreds of millions of dollars to get an operating facility. It's CapEx light. Very briefly here, kind of idealized view of how the revenue profiles look for conservation projects. On the higher upper line, you get a lot of your credits early on from the avoided destruction of that forest. And then you get a lower tonnage that's produced from a mature forest over time. With a restoration project, you get this more classic Sigma curve where the credits grow over time and continue to grow in some cases for up to 50 to 80 years, adding more and more carbon each year as the forest matures. This is the status of our current project pipeline, which covers about 43 million tons. 2 restoration projects in Sierra Leone covering 57,000 hectares. Mangrove restoration project, which is well underway now, with a PD going into having gone into Vera for review, so fairly well advanced. A very interesting conservation project there. And then in Yucatan, as a result of complex and challenging negotiations at time by Patricia Cumming, who's our lead in Mexico, we have up to 100,000 hectares of conservation and restoration in Yucatan, in areas on degraded mangrove along the coastline. And then in Suriname, similar mangrove restoration opportunities covering up to 30,000 hectares. Just a sense of what that translates to in over 5 years and over the full lifespan of the projects. The 10-year target is $111 million of revenue realized or delivered from that initial tonnage. 30-year forecasting is close to $1 billion of revenue, but increasingly what we're seeing is forward purchases of those credits, which we can recognize as revenue. This modeling doesn't include our work in Suriname. We're still in the evaluation process around that, but we think that will significantly increase these project areas. So I think you've seen most of these slides before on the deck, hopefully. What I'll just speak to quickly now is the announcement we made earlier this week. We have completed the first now 1,400 hectares of planting in Sierra Leone. We committed to plant 1,000 hectares with our off-taker earlier this year, and we managed to complete that. That gives us a few weeks now of continuous rain before the dry season. That helps the trees get planted. We also were able to announce the sort of full distribution of the funding to all of the local smallholders, supervised by a bank, monitored by an independent third party. So we're able to complete that work. And then most recently, we've also we'll be reporting soon on a site visit by the Fortune 100 company that's purchased the first project site. So as soon as we get a green light on that, we'll be able to share some insights on that. But that site visit's gone extremely well. So we're feeling like the company that does what it says it's going to do, that we deliver on kind of our promises in terms of how we deploy capital in a market that's been very challenging from investors' perspective. We feel very confident in our providers and developers, and feel like our customer base is very strong. Like that.
Thanks, Jim. We've got some questions coming up. Do you want to read those?
Yeah, I can see the questions on the right, so I can address those. I'll take the first one from Ignace. So due to many scandals, Mark is moving to a rating system to help distinguish better quality voluntary carbon credits for the buyers. Are we looking to get rated? We're not looking to get rated. Some of the buyers that we speak to use the rating systems, but most of the buyers we work with have very sophisticated in-house teams who many of whom are ex-project validators or developers themselves. They go inside the project, look at all the details, look at the species mix and the modeling. They do much more due diligence than an arm's length rating agency is able to do. So groups like B0 and Silvera rely on satellite data to and just review of the PDDs to evaluate the projects. We don't think that that provides better insights for investors than a high quality validation and a high quality customer. And in most cases, the rating agencies where they are being used as a sort of second resource. But, the teams that we speak to on the buying side have, 10 to 12 people working on quality control around these projects who are forest ecologists and scientists and understand the details of these projects. And they get inside the project and see all of the detailed modeling. They can get into far more depth than any of the ratings agencies can. I do think there's some real concerns about quality control in under the Vera system, and there's also some invented problems. And there's certainly a movement amongst some journalistic and science-based teams, or allegedly science-based teams, that have just simply don't like offsets, don't like carbon credits at all. They believe that carbon credits are how companies avoid responsibility for reducing their emissions. That's simply not true. All of the evidence from research suggests that the companies buying credits are also heavily invested in reductions. There are very few companies that can make reductions more than 10 or 15%. And so carbon credits are a critical part of that. But for some NGOs and some people, the belief is, there's a sort of ideological position that any carbon credits are bad, so they find any excuse they can to attack them. We still believe in Vera. We think it's the best global registry. Our biggest frustration is they're overwhelmed and they're slow to respond. Howard's question, does your model extend to active natural climate solutions such as regen agriculture, agroforestry, and silvopasture? If so, how does your model aggregate smallholders? So I'll take the last one first. We already aggregate smallholders in our Sierra Leone project. All land in Sierra Leone outside of Freetown is owned privately by smallholders. When we were in the field distributing funds earlier this week and last week, we were meeting with smallholders, getting them to sign contracts, having that monitored, and paying them for the leaseholds on their land. In fact, something like 80% of the restoration potential across Africa is in the hands of smallholders. So we aggregate that, and we've been working on an in-house custom technology solution that will actually at some point allow buyers to trace the carbon tons right back to the original smallholding and see how that's developing. So we think that kind of technology solution provides a lot of transparency. We do look at regenerative agriculture. We look at agroforestry. What we're finding at the moment is the buyers have a strong preference for restoration and strong preference for restoration of native species. So silviculture and agroforestry in tropical countries is not in favor at the moment, and we're getting the best pricing and the best interest in native species restoration. I think regenerative agriculture is very interesting as an area. We've looked at some projects in Colombia around cattle pasture management and regenerative agriculture. So there's some interesting opportunities there. Titus?
Can you speak just to that question, how would the smallholders be making money if it wasn't for Klimat X? So they would projects, but what are we avoiding by?
Yeah, I mean, most of this land is highly degraded former rubber plantation and coconut plantations. So in most cases, it's just fallow land. It's unused. We're not displacing any other economic activity. We're taking land that's sort of unusable and paying them. It's the only source of income they're going to get from this land. And that's almost one of the criteria for selecting the project areas. So these are people in Sierra Leone living on, in many cases under $1 a day, have very few other sources of income. We're paying them a leasehold on the land, which is important because it's their land, and then in many cases providing employment opportunities for them as well in both harvesting of seeds and also in the planting process. So the economic impacts of this are really important, and some of that means that people are not driven to cut down mangroves, for instance, for firewood. We're giving them alternative sources of income. Titus has a question around the ICVCM plans to roll out the carbon credits in Q1. We will obviously look at that process in parallel to the Vera validation and verification processes. I think it's really important to be clear about where the criticisms have been in nature-based solutions. It's not a general criticism of NBS. The most of the focus has been on RED projects, so conservation projects. And the biggest issue has been, in the most recent articles have been when an area was conserved in Africa, 10 years ago, the project was first created. It made some assumptions about what the background deforestation rate was going to be. So it had a reference project site. And so all of the carbon credit generation is based on assumptions at the time about how quickly that forest would be cut down. It turns out that they had, the best data available from government, but actually the deforestation rates have been lower. So there's a good chance they overcounted how many credits were produced. Once you discover that under the VERA registry, then what you do is you slow down the future rate of issuance of credits until you balance it out. There is a self-correcting mechanism for it. In the case of one or two high-profile cases, it wasn't even necessarily that the mistakes were made. It's that the data that they had at the time didn't reflect perhaps changes to the way that forestry was going to be managed. So for our projects, which are mostly restoration, in simple terms, we're starting with empty land. That's our baseline. We get to count the credits from all of the trees that we plant. And as long as we protect and conserve those trees till they're mature, then the calculations are in some ways much simpler these conservation projects. And that's why lots of the market has moved towards our restoration style projects, because they're fundamentally they're simpler to establish a baseline and then show the difference that you've made, because we planted all the trees there. So I think that's important for nature-based measuring nature-based solutions. Another Zoom user, we mentioned 1 to 200,000 hectares in Sierra Leone. Currently, we have, you're correct, 57,000 hectares under the sort of initial leasing arrangements. That's already a very large area for planting, and we're starting to think now with some of our investors about how we continue to scale up nursery construction and development and seed collection. The process for locking down the additional acres will be very similar to what we've done before. Kev Godlington and Neeks work out in the field, negotiate with the regional chiefs, speak to the government, and initiate a process of doing mapping work to identify who actually owns the land, and then going out and talking to them. But right now we have more land than we can plant in 2 years at least, or 3 years. And so it doesn't make sense to secure it unless we have, as we're working on right now, very large scale investors that want us to kind of modularize what we've done and ramp up even faster. So it's the same process we used to get to this land initially, to build those out. Ignace said, if you were rated, would it attract more positive publicity and distinguish you in the press and attract more buyers? Honestly, we don't have any problem attracting buyers. We have very, very strong interest in our pipeline from the large final emitters that need credits. Almost every group that we speak to, particularly for the restoration project, is very interested in making an investment and in buying. But finding buyers has not been a challenge. And the buyers that we work with that use the ratings agencies use them as a secondary check, because their own due diligence is so detailed. They use them almost as a secondary truth check. But frankly, the idea that an arm's length, review of documentation and then some satellite data is going to provide a better due diligence than we get talking directly and sharing directly with the in-house teams just doesn't make a lot of sense. They get far more detail and far more scrutiny through their own processes than they'll get from a third party. Thanks, Ignace. Mangrove conservation's projects viewed differently from RED conservation credits by the buyers? Yeah, absolutely. And there's a big price premium on mangrove restoration projects, particularly at the moment. It wouldn't be crazy to see prices as high as $50 a ton for mangrove restoration. Even mangrove conservation is more popular than tropical forest conservation. And part of the reason for that is actually simpler to account for the deforestation rates of mangroves. People cut down tropical forests for commercial timber and industrial scale operations. Most of what's happening to the mangrove from deforestation is from local people cutting down for firewood. It isn't part of the sort of normal value chain. So it's easier to show a conservation area. And then people just love mangroves. They love the story around them. They love the production. So conservation, restoration mangroves, and very high premium. Even conservation mangroves, we're seeing a lot of interest as well, although not as much as restoration. So I hope that answers that question. Howard from Kulshan Carbon Trust, does biochar play a role in your restoration projects where there's biomass available? We haven't looked. We've looked at biochar, but we don't have any project sites that use it yet. We were looking at a potential biochar land remediation project in Indonesia, actually. So that's one project site where there's some degraded forest where you can cut it down, convert it to biochar, do soil remediation, and then do planting. But we haven't seen those opportunities in the other project sites that we're looking at the moment. Osman, you've asked if there's a recording. Yes, I'm pretty sure we are recording this, and that we are definitely recording it, and we will share that link with everyone. What project is next for the bidding process? That will be, we've filed the PD now for the Sierra Leone Mangrove Restoration Project. That's under review by, it's not publicly available yet, but it's under review by Vera. And we will run a process around that over the next 2 months to get interest in that restoration project. And we have some active interest underway already. So expect to see some outcomes from that before the end of the year.
James, one question that I got this week in an email from an investor is there's a lot of news on carbon capture. Can you explain the difference in terms of the value of each? And I know you always say we need everything on the table to reach net zero, but just in terms of the cost of that and comparison to what we're doing. Thanks.
Yeah, I mean the carbon capture and storage, typically is very large scale industrial technology driven. So Carbon Engineering, which was just bought by one of the US oil and gas companies, pulls carbon directly out of the atmosphere, has reaction chemistry that pulls it into a liquid form, and then actually converts it back into a liquid fuel. It's very energy intensive. And nobody's really found a way of getting it below $100 a ton. I sort of joked with someone earlier this week that we're using a technology that has the lowest cost of carbon production in the world, uses natural photosynthesis to store carbon from the atmosphere into trees, and is 10 times more efficient than any other technology that's ever been invented. It just happens to be a tree. So nobody's come up with a way of pulling carbon out of the atmosphere that's as efficient and effective as plants, as trees, and storing them in biomass. So you could argue reforestation is carbon capture and storage, but most of the technologies we're working with are much more expensive and energy intensive. There's some interesting things happening in the mining sector with using rock surfaces, using ground up rock, things like olivine as reactive chemistry for carbon storage. There's some very interesting things happening with iron fertilization in oceans and test facilities, but it's all much smaller scale and much earlier stage than what we understand very well now about the biology and botany of trees. So I hope that helps explain some of the differences. People, as Julie mentioned at the beginning, people get into this sort of bake-off between the different technologies, this sort of mindset that we need more clean tech, we need emissions reductions, we need nature-based solutions, we need carbon capture and storage, we need newly invented technologies that are in the pipeline. And it's presented sometimes in the media and amongst advocates as a bake-off, as one of those has to win. Actually, you have to do all of those things to get to 23 billion tons of emissions reductions. And the reason we do nature-based solutions is large scale, lowest cost. And that's simply it. I'm a big fan of all the other solutions as well, but we have to do all of it to get there. Gil asked a question around tree counter and what it means to Klimat X and the industry. This is a technology that Kev Godlington has led the development of, working with technology teams in Copenhagen and in across Africa. Tree counter, the core technology surveys trees as they're planted and provides a GPS location for them within the property boundaries. And that then drives future modeling for how those trees are likely to grow based on a proprietary database that we use. And as they grow and become larger, it allows us to monitor the growth using both drones, but also space-based observation, working with existing platforms like Sentinel and Landsat, but also with newly launched platforms like Earth Daily, which is providing daily global coverage at a 3 to 5 meter resolution next year. So it's an integrated solution that will allow carbon credit chain of custody tracking, supply chain tracking, all the way from the smallholder down to the final user. And we think that transparency is going to be demanded by customers and will be really, really valuable. Osman said, planting trees alone cannot guarantee carbon credit sold. What's the other processes that trees needed to undergo to get certified and start selling as a carbon credit? So I think this is about the verification process. So we build a project design document that looks at land title, it looks at previous land uses, it looks at carbon title under national law, it looks at the tree species that are within there, it models those tree species based on known growth curves. It builds out a projection for what the project is likely to produce. And then each year we come back and actually directly measure the trees to see how much they have grown. And it's only after we've measured the trees and verified the credits are real that we're able to sell and deliver those carbon credits. So our investors at this stage are taking risk that those trees will actually grow and deliver the credits. But the science around tree growth now is very well established, and we have pretty good modeling. I do think it's worth mentioning, just in terms of, I get a lot of outreach from shareholders and investors. We're very much a retail company. We try to be as accessible as possible and to talk to as many people as we can. We're very actively involved in storytelling and marketing this story in North America. We're also in Scandinavia. We're in the UK. We've been getting a lot of interest from Germany as well in our story. So from the perspective of where the public markets are at right now, which is still pretty beaten up, we get a lot of interest, and relative to most other companies, our average daily volumes are significantly higher. So if you're there as an investor, we're not just focused on the operations of the project, we're very focused on building awareness in our profile amongst retail and increasingly institutional investors.
Yeah, so basically the presentation has been well understood, and I think everything you've shared so far is actually what some of us needed to know in terms of this carbon and mangrove, let's say, preservation and all. So the question I wanted to ask is, like, let's say oil palm planting or oil palm operations, normally you have organizations like RSPO who normally do the certification for the standards and all. So when it comes to the carbon, let's say with the planting of the trees, is there any specific, let's say, organization that normally do the review process, maybe the standard in terms of ensuring that they actually meet the standard that is needed for the carbon credit? That is one. Then two, what is the size of, let's say, the tree planting? Is it like maybe you need like 100 hectares as a start before maybe you can be considered as maybe the carbon, let's say, footprint, or rather what is the minimum of the trees needed for an organization or somebody to plant?
So Osman, maybe I can provide a quick response here, but please just email me and I'll send you some more of the kind of background and materials and that we've developed for explaining this. So the technical verification work is completed by accredited validators and verification organizations that have gone through the Vera training, are certified, have the right expertise. And so we rely on Vera to identify who the accredited validators and verifiers are. We develop the actual documents ourselves in-house with our consulting team. And then those are presented to the third parties for review. So there's a well-established audit and assurance process that's been built up in carbon markets. And if you want to know a bit more about that, maybe just email me and I'll share those with you. I would say in the current market, kind of minimum project size, absolute minimum is probably 2,000 hectares for restoration. For conservation projects, for things like mangroves, where they're highly productive, you could probably do 2,000 or 3,000 hectares minimum. But you know, we think we selected 5,000 for our first commercial process because we felt like that was the minimum we needed just to get to you know, cover the base costs and have something that was going to produce enough volume. That produces 1.9 million tons over the lifespan of that project, so or the contract period of that project. So I would say, you know, 2,000 hectares minimum for restoration projects, because there's some fixed costs with all of these. Corey asked, is the Fortune 100 company going to do a story on us or mention in their marketing? Yes, I expect they will. They're a large company and they're slow to move, but there will be a point in time when we're able to speak to who it is. Howard asked, do we plan to serve customers that have biodiversity goals as well as net zero commitments? Yeah, we're looking now at how we do biodiversity credits and conservation credits as part of this work. There isn't a big market for those yet. We're not seeing large amounts of buying, but within the Vera process, we do CCB accreditation, which covers some of the biodiversity benefits. And we are pretty well set up for looking at kind of conservation credits. It's just that the carbon market is much more active now and much larger than what we're seeing in conservation credit markets. Yeah, I mean, I'll maybe just close with a sort of refreshing you on the roadmap for the fall. We'll be talking about the results of the field visit, the October field visit. We'll be talking a bit more about our technology platform. We have filed our mangrove restoration project, and we expect to, I think Neeks was on the line earlier on, but we're going to aim to try and plant up to 300 hectares of mangroves directly in the fall. We've already planted 15 hectares. We're making very good progress in Yucatan on large-scale restoration and conservation project, and we're also looking at some other project types in that jurisdiction. And within Suriname, we'll have finished some of the technical and scientific research to establish what the scope and scale of that project is going to be as well. So, you know, I'd expect to see you know, a news release every 10 days through the fall, and you know, we're feeling like we're making huge amounts of progress. So yeah, keep us posted. If you reach out to me and you don't hear back in a couple of days, it just means you've disappeared down my inbox. I don't mind being asked again. Please come back to me. Yeah, Mark, the Yucatan market must be huge. It's going to be a very large scale project. It's going to take a while to develop it because it's a big engineering and hydrological restoration project, but it's a very, very exciting project in the landscape that we're working in. So very excited about that one.